Welcome to the deep dive. So imagine this.
Hmm.
Some of the sharpest financial minds out there decide to place $1 billion bet on one single resource project.
Yeah, that's exactly what seems to be happening with NovaGold and this Donlin gold project up in Alaska.
Right. And today we're digging into the sources you sent over, company reports, investor takes, presentations.
Mhm.
Our mission's pretty simple, really. We want to cut through the noise, find the signal, and help you quickly get a handle on what's really important about this massive story.
We're going to unpack the asset itself, the scale of the gold, and then dive into this really game-changing deal that just went down.
And why some very, very smart money is leaning in hard on this specific project,
Mhm.
even while maybe others have stepped back in the past.
Exactly. It's a fascinating mix, isn't it? Geology, big finance, partnerships, lots going on.
Okay, let's jump right in then. What exactly is Donlin Gold? What makes the asset itself stand out from the crowd?
Well, at its heart, Donlin Gold is potentially one of the largest undeveloped gold deposits anywhere in the world.
Wow.
And it's located in Alaska, which, the sources consistently describe as a really top-tier place for mining.
Okay, top tier. What does that really mean here? Why is Alaska such a big deal?
It means stability, predictability, right? Alaska's ranked 13th globally on this investment risk index. It's got an AO rating.
Okay.
It's already the second biggest gold-producing state in the U.S., and the project, well, they've cited support from senators, representatives.
So when you're talking about a project needing billions, literally billions over decades, that kind of stable ground is foundational.
Absolutely foundational. You need that certainty.
It's not just the state level, though, is it? The sources really seem to zero in on the land ownership. That seems unique.
That's a critical point. You see, unlike a lot of big mining projects, Donlin sits on private land.
Private land.
Yeah, owned by two Alaska Native corporations, Callista Corporation and the Kuskokwim Corporation, TKC they call it. And this land was specifically set aside for mining decades ago.
Ah, okay. So not public land where priorities might shift with, politics or whatever.
Exactly. This was designated for resource development under that Alaska Native Claims Settlement Act.
And the relationship with these native corporations, it sounds really deep, like way more than just a landlord-tenant thing. What kind of agreements did the sources mention?
Oh, yeah, it's built over decades. They've got exploration and mining leases with Callista, a surface use agreement with TKC.
Okay.
And these aren't just, vague things. They cover real specifics, like hiring preferences for shareholders, their families, preferences for their businesses as contractors,
Right.
contributions to scholarships, agreement on key infrastructure like the port facility, Jungjuk Port. That's vital for logistics.
Getting stuff in and out.
Precisely. And crucially, oversight during mine closure and reclamation, too.
So they really have a seat at the table, start to finish, including the cleanup.
That's the picture painted. The presidents of both corporations are quoted, calling it a generational opportunity, but also stressing their commitment to, environmental protection, community health. That social license is huge.
Right, that's a massive asset in itself these days. Okay, so secure location, check. Strong local partnerships, check. Now, the gold itself, the numbers, they're just enormous.
They really are. On a 100% basis for the project, sources mention 39 million ounces of gold in the measured and indicated resource categories.
39 million ounces.
And within that, 34 million ounces are classified as proven and probable reserves. That's the stuff they're most confident in economically.
34 million ounces, that puts it right up there, doesn't it? Among the biggest undeveloped gold piles globally.
Definitely among the largest. It's a world-class scale.
But it's not just how much gold there is. The sources emphasize the quality, right? The grade.
Yeah.
How much gold per ton of rock?
Absolutely critical. The average grade is around 2.24 grams of gold per ton of rock.
2.24. How does that compare?
Well, put it this way. The industry average for these big open-pit gold mines is closer to maybe 1.03 grams per ton.
So Donlin's grade is more than double the average.
More than double, yeah.
Wow. And practically speaking, what does that mean for actually mining it?
That's the key insight, really. Higher grade means you move and process way less rock to get the same ounce of gold.
Right. Less waste rock, less energy, less cost, presumably.
Exactly. It fundamentally impacts your operating costs, your efficiency. It's a huge factor in why Donlin looks attractive, even with the remote location and the big scale.
Okay, so you combine that massive scale with that really high grade.
Mm-hmm.
What kind of production are we talking about? Potentially.
Well, based on the 2021 technical report they put out, the potential is for a 27-year mine life.
27 years.
And during that time, averaging about 1.1 million ounces of gold per year.
A million ounces a year.
And potentially even higher in the first 5 years, maybe up to 1.5 million ounces annually then. So, yeah, really significant long-term production.
A million plus ounces a year for almost 3 decades.
Yeah.
Yeah, that would be one of the biggest gold mines in North America. Easy. So how far along are they with getting the permits, the green lights, to actually build this thing?
They've made significant progress there. The key federal permits are already in hand. That includes the final EIS, the environmental impact statement, and the joint record of decision. Those are huge milestones.
Right, the big federal ones.
Yeah, plus key water and land use permits, like the Section 10404 permit, the BLM lease offer for the pipeline route, transport approvals too.
Okay, so the federal side looks pretty well advanced. What about the state level permits?
The sources describe state permitting as being on track for completion. That covers things like air quality, water permits, APDES, Clean Water Act 401, and the big one, the reclamation plan for cleanup afterwards.
Now, I did see some mentions. Are some permits being appealed or challenged in court? What's the situation there?
Yeah, that's pretty typical for projects this size. Some permits are under appeal, but the sources note that earlier challenges in state courts didn't succeed. Okay.
And the current administration, the Biden administration, is actually defending the federal decisions in court.
Right.
There was a Pacific Court decision about the tailings storage analysis, but the briefings and arguments on how to address that, the remedy, were basically wrapped up earlier this year, March and May 2025. So, yeah, legal stuff ongoing, but the core permits seem largely in place or heading towards finalization.
Okay, so let's recap that bit.
Yeah.
You've got this monster asset, high-grade, stable location, strong local buy-in, and permits mostly done or well underway. But then, boom, this massive transaction just happened. This is where it gets really interesting, right?
Oh, absolutely transformative. The sources all detail this $1 billion deal where Barrick Gold sold its 50% share in Donlin. It just closed. June 3rd, 2025, announced back in April.
So before it was 50-50, Barrick and NovaGold. What's the ownership structure now?
Now it's 40% Paulson Advisors, that's John Paulson's firm, and 60% NovaGold. Barrick is completely out as a direct partner.
And that $1 billion, how did that flow? Okay, so Paulson's firm paid $800 million cash to Barrick for the 40% stake.
$800 million.
And NovaGold paid the other $200 million to Barrick for that extra 10%, bumping their share up to 60%.
Okay, $200 million is still a pretty big check for NovaGold. How did they manage that?
They did a capital raise, closed an upsized public offering in a private placement back on May 9th, raised about $244 million gross, netted around $234 million after costs.
Got it. So that covered their share and gave them some working capital.
Exactly. Funded the acquisition and project advancement.
Okay, so why? Why did Barrick, one of the world's biggest gold miners, sell out of a deposit like this? Seems odd on the surface.
Well, the sources point to a strategic shift for Barrick. They're focusing more on their operating mines, their core assets, and also increasing their exposure to copper.
Okay. Different strategic priorities.
Right. And Donlin, while huge, needs that enormous future capital spend. Remember that $7.4 billion initial estimate. Selling, let Barrick free up that future capital commitment.
And get cash now.
And get cash now at what they called an attractive valuation, likely helped by the strong gold price.
Makes sense from their side then. Trade future potential and spending for cash and focus. Now, why is this deal Paulson and NovaGold taking over? Why is that seen as so transformative for Donlin itself?
This is really the core of it. Barrick, rightly or wrongly, was seen by some analysts and investors as maybe a passive partner or even a reluctant one. Meaning their strategic priorities, like focusing on operating mines and copper, just didn't quite align with aggressively pushing Donlin forward and committing that huge capex.
Okay, maybe they were acting as a bit of a brake on development.
That was the perception in some quarters. But now you bring in Paulson. He's a dedicated gold guy, right? And he's explicitly committed, quoted as wanting to advance the project immediately toward production.
So you've got alignment now.
Total alignment. Both partners, NovaGold and Paulson, are pulling in the same direction. They both want to de-risk this and get it built. That alignment is crucial after years where maybe the partners had different near-term goals.
And even though NovaGold has 60% and Paulson 40%, there was something important about governance.
Yes, really key detail. Despite that 60-40 ownership split, they have equal governance rights. Equal say in project decisions.
Okay, so a true partnership. No one partner can just dictate terms or block things.
Exactly. It's set up for collaboration, shared decision-making. That's huge.
Right, avoids potential future conflicts. Okay, so this brings us neatly to the super investors. Who are these big players and why Donlin? What's their thinking?
Well, John Paulson is obviously the headline name from this recent deal. He's, practically a legend in the gold world, known for these huge high-conviction bets.
And his view on gold itself is pretty bullish, isn't it?
Extremely. Sources say his macro outlook sees gold potentially hitting $5,000 an ounce by 2028.
Wow, $5,000.
Driven by things like central banks buying gold, geopolitical tensions, maybe some de-dollarization trends. That's his big picture.
And Donlin is how he plays that theme.
Precisely. He sees Donlin as uniquely positioned, massive scale, that high grade we talked about, the safe Alaska location. He views it as a strong inflation hedge and having just incredible leverage to a rising gold price.
Right.
He called it one of the best and most jurisdictionally attractive gold development projects in the world and said it was worthy of such an extraordinary investment. Strong words.
And it was an extraordinary investment, wasn't it? $800 million directly into the project partnership, not just buying shares on the open market.
That direct project-level buy-in is a massive signal. Huge conviction. And his firm has history here, too. They were involved in advancing Detour Gold and other large projects, so he's not just a passive investor.
Okay. What about other investors mentioned, like First Eagle? They've been in NovaGold for a long time, right?
Yeah, First Eagle Investment Management, they're well-known value investors.
Yeah.
Very disciplined. They've long liked gold as a sort of store of value, a hedge. They look for what they call the cheapest gold ounces in the ground.
And Donlin fits that bill for them.
Apparently so. Their thinking seems to revolve around asset replacement value, like what would it cost to find and develop another Donlin today? They probably think it's way more than NovaGold's market cap implies.
Right.
Plus, they value the optionality, the leverage to higher gold prices, and seem to rate the management team. They've been a big, long-term holder.
Though I did see a note, maybe they trimmed their position a bit recently. What's the thinking there?
Yeah, that's a good nuance. While they're clearly still a major holder, institutions like First Eagle sometimes make tactical adjustments. It could be portfolio management, managing risk exposure to a non-producer.
Or maybe reacting to the dilution from the recent share offering.
Could be. Even if they participated, they might rebalance slightly. Doesn't necessarily mean they've lost faith in the long-term story. Just, managing a huge fund has its own dynamics.
Okay, now let's flip the coin. Seth Klarman's Bellpost Group. They were in NovaGold once, but they got out. What does that tell us?
Yeah, the sources suggest Baupost exited much earlier, maybe around 2013 or so.
Yeah.
It's a really useful contrast to Paulson jumping in now.
How so?
Well, Klarman is a classic value guy, always looking for that margin of safety. Back then, maybe the super long timeline for permitting, the huge capital costs looming, the risk of lots of dilution, maybe that just tested his patience or didn't fit his risk profile at the time.
So his exit kind of highlighted the historical challenges and risks.
Exactly, the patience required. Right. Whereas Paulson's entry now is a bet that with the new structure and capital, those hurdles are more navigable, that the time is finally right.
Interesting contrast. Klarman's exit reflects past frustrations. Paulson's entry signals future acceleration. Any other key investors involved in the recent financing?
Yeah, definitely. The Electrum Group, which is led by NovaGold's chairman, Thomas Kaplan, they're a major long-term backer, and they participated again. And Copernic Global Investors, another significant long-term holder, also chipped in. So you've got Paulson coming in strong, plus continued support from these long-time institutional backers. Signals pretty broad support for this new phase.
Okay, so with this aligned partnership, fresh capital, why do the sources seem to suggest Donlin is maybe more likely to actually get built now? What's the path forward look like?
Well, several things are lining up. First and foremost is that aligned partnership we keep mentioning. Equal governance, shared goal. That removes potential friction.
Right, no more reluctant partner potentially slowing things down.
Exactly. Second, they've got the cash now for the immediate next steps from that $244 million raise and Paulson's big check.
Okay.
Now, that $7.4 billion estimated initial cost is still out there, a huge number. It'll need major future financing. But the thinking is this new partnership structure, plus Paulson's credibility and deep pockets, should make securing that future funding much easier, maybe less dilutive for NovaGold shareholders than if they tried to do it alone.
Makes sense. Easier to raise money together. So what are they actually doing right now? What are the immediate priorities?
The sources lay it out pretty clearly. But they're kicking off work streams to update the feasibility study. That's like the detailed blueprint for the mine.
Updating it for current costs, current gold prices, all that.
Exactly, refining the plan. They're putting together a dedicated team just for that.
Okay. What else?
They're shifting the drilling focus, less broad exploration, more targeted drilling to convert existing resources into reserves, the higher confidence category, and maybe even expand those reserves within the known deposit.
Prove up what they've got.
Right. And also unlock more potential along the mineralized belt. They've only really explored about 3 kilometers of an 8-kilometer belt. It sits on less than 5% of their total land package, lots more ground to potentially explore.
So firm up the core and look for more nearby. Makes sense.
Yeah. Plus, advancing the detail engineering designs, getting those last state permits nailed down, keeping the federal ones current, and importantly, continuing to work on the community engagement with their native corporation partners.
Building that social license.
Always crucial. So it's a multi-pronged effort, all aimed at de-risking the project, getting it closer to a construction decision.
And underpinning all of this, of course, is the gold price itself. That must help the economics considerably right now.
Oh, hugely. The sources really stress this. Donlin's economics just look much, much stronger at current gold prices, in the $2,000 plus per ounce range people are citing.
Right.
A higher gold price makes that massive $7.4 billion upfront cost look a lot more manageable for potential financiers, boosts the potential returns.
What if, hypothetically, NovaGold and Paulson don't end up funding that full $7.4 billion themselves? Is there another way for NovaGold shareholders to see value?
Yeah, the sources talk about strategic alternatives. Even if this partnership doesn't build it all the way, just completing that updated feasibility study, getting all the permits lined up, making it truly shovel-ready. That makes Donlin an incredibly attractive prize for a major gold producer.
Like who?
Maybe a Newmont, an Agnico Eagle, maybe even Barrick again someday, who knows? Or perhaps a big mining-focused private equity firm.
So selling the de-risk project could be another way to unlock value.
Absolutely. That's another potential pathway.
Okay. Build it up to make it easy for someone else to step in. This whole picture really seems to fit that idea of an asymmetric bet, doesn't it? The sources mention that. Can you break that down for Donlin?
Yeah, an asymmetric bet basically means the potential upside is much, much bigger than the potential downside. Donlin fits this mold for 2 main reasons. First, those low operating costs we talked about.
Right, because of the super high grade.
Exactly. That 2021 report estimated operating costs around $635 an ounce, plus sustaining capital, leads to an all-in sustaining cost, or AISC, projected somewhere in the, let's say, $700 to $900 per ounce range.
It was very low globally.
Very competitive. And that low cost gives you a big operational cushion, a margin of safety. It means the mine could likely stay profitable even if gold prices fell quite a bit. That helps limit the potential downside risk.
Okay, so low costs put a floor under it, relatively speaking.
Yeah.
Where does the huge upside come from then?
That's the second part. The incredible leverage to the gold price.
Right.
The sources estimate, and this is pretty stunning, that for every $100 increase in the gold price, Donlin's net present value goes up by about $900 million.
Wow. Say that again. $900 million in value for just a $100 move in gold.
Yeah. Extraordinary leverage. It comes from the sheer scale, all those millions of ounces, combined with the low costs and that long, long mine life.
So every extra dollar per ounce in margin gets multiplied across a massive number of ounces for decades.
That's exactly it. Creates this huge amplification effect on the project's value when gold moves higher.
So the asymmetry is clear. Downside, potentially buffered by low costs and the safe location, while the upside is, well, potentially massive, driven by scale and that gold price leverage, assuming they execute the plan.
That's the core bet. The development risks are real permitting, construction, financing. But if they navigate those successfully, especially with strong gold prices, the potential payoff could dwarf the capital invested so far.
Okay, let's bring this home for the listener. How does the stock market value NovaGold right now compared to this potential project value we're discussing?
Yeah, there's definitely a gap, which, is pretty normal for these big development projects. Sources mention NovaGold's recent market cap bouncing around somewhere between maybe $1.1 billion and $1.8 or $1.9 billion in that range.
And what are the analysts saying? Do their price targets reflect this gap?
They seem to. Targets cited, like RBC's average range of $10.20 to $14.05 a share, or a Zacks' average around $7.06. They imply pretty significant upside from where the stock has been trading, 60% to over 170% implied upside potential.
But when you look at the actual project's potential value, based on those NPV estimates, the numbers are way bigger than NovaGold's current market cap, right?
Oh, way bigger. That 2021 report, using a 5% discount rate, put the after-tax net present value anywhere from $3 billion at $1,500 gold up to over $11 billion at $2,500 gold.
And NovaGold owns 60% of that now.
Right. So NovaGold's 60% slice of those potential NPVs is significantly higher than its current, billion and a half-ish market cap.
So why the big discount? Why the gap?
It's the market pricing in all those risks we've talked about, the development risk, the timeline risk, how long until potential production, the financing risk, where does that $7.4 billion come from? The market puts a heavy discount on assets until those risks are reduced or eliminated.
Okay. So how does that gap close? How does that value potentially get unlocked for shareholders?
Well, the path forward, according to the sources, is hitting those milestones. Successfully updating the feasibility study, securing the final permits, making a positive construction decision, actually starting construction.
De-risking the project step by step.
Exactly. As each major risk gets retired, the market should, theoretically, reduce that discount. NovaGold's share price should move closer to reflecting its share of the project's underlying value.
Or, as you mentioned, a takeover could crystallize that value more quickly.
That's the other main route, yes. An acquisition by a major could force the market to recognize that value sooner.
Well, this has been a fantastic deep dive, really digging into the layers here: geology, finance, partnerships.
It's definitely a complex story, but the core pieces seem pretty clear now, don't they? World-class asset, game-changing deal with aligned partners, and this clear path forward with massive leverage to gold.
Yeah, we've seen Donlin. Huge scale, top-tier grade, stable location, crucial native corporation backing. We've unpacked Barrick leaving and Paulson arriving with that $800 million check, creating this aligned 60-40 partnership with equal say.
And we've explored how those low projected costs and the sheer size create that asymmetric risk-reward profile, especially if gold stays strong or goes higher.
Right. And the immediate next steps are clear. Update that feasibility study, drill smart to boost reserves, keep pushing on permits and community relations.
Yep, focus on execution now.
So it really leaves you with a big question to ponder, doesn't it? You've got this potentially massive mine, America's largest gold mine perhaps, huge capital needed, yes. But now you have these aligned superinvestors like Paulson, plus long-term backers like Electrum, Copernic, all pushing in the same direction.
Yeah.
Is construction now almost inevitable?
Or are the hurdles still significant enough, maybe financing challenges, maybe unexpected delays, that the end game is actually a takeover, a major producer stepping in to grab this long-life asset for their own portfolio?
It's a really fascinating scenario to watch unfold in the gold space. What part of this deep dive stands out most to you, the listener? Think about that asymmetric bet, the role of big money in making these massive projects happen.
Lots to chew on there.
Definitely. We'll catch you on the next deep dive.